So today's been a pretty busy day. We're having our second family reunion of the summer. The first one is always mine. So the Peck family convenes at our house in Silicon Valley, and then at the end of the summer, which this is the, I guess, official weekend that ends the summer, Burgess has her entire family over. So there's been a lot of cleaning and preparing and running around to the airport and other places to pick up uh, people coming in from different parts of the country. So it's been pretty busy. In fact, right now, um, my 7-year-old's at soccer practice with his grandpa watching him while I record this podcast for you guys this weekend. And, there's some really interesting stuff going on. And, I want to talk about currencies. And the interesting thing about currencies is they're almost invisible to people, right? I mean, everyone who lives in America who doesn't trade currencies kind of thinks the world's currencies rise and fall in comparison to the US dollar. And the same is true if you live in Europe and get paid euros, and if you live in Japan and get paid yen. You don't really notice these fluctuations. But it's pretty important because it actually impacts a lot of where money flows around the world. If one currency is weakening and another one is strengthening, and that also has kind of some parallel to how strong that bond market is doing, money is going to move away or flow towards that currency. So, though it may sound like a boring topic, I want to kind of speak about where the money is flowing and what it's telling us and what it can tell you about what the next 18 to 30 months is going to look like. Hey everybody, this is RC Peck, and this is my weekend podcast where I talk about investing, income, and behavior. And the theme of this weekend is the best looking horse in the glue factory. So what I want to do is look at 4 of the most popular currencies on this planet. We can't go to Venus or Mars. We are kind of stuck with the currencies on this planet. So we're going to look at 4 of the most popular and see what they're kind of telling us. So the first one we're going to look at is the Japanese yen. And you got to look at this picture here. Over the last 3 years, the Japanese yen has fallen 27%. And you can see, or if you can and you're listening to this, the majority of that 27% fall happened in a 6-month period from the end of 2012 to the beginning of 2013. A 27% fall. And this was absolutely manufactured by the Japanese government. They want to weaken the yen. And in fact, right now today, it's about 102, 103 yen-ish to the US dollar. When they started their campaign to weaken the yen, it only cost about 78 yen to buy the US dollar. And I don't think they're going to stop until they're at about 150 yen, costing about 150 yen to get the US dollar. So clearly, if you're in Japan and you see what's happening, or you used to put your money in the Japanese yen, you're not putting any more there, and you're actually moving that money that you want in a currency to another currency around the world. So the Japanese yen is getting crushed right now, and it looks like it's just about ready to take a next leg down. Again, I think we could have another maybe 50% fall in this currency over the next 3 years. The second currency I want to look at, or what I'm going to call currency 2, is the euro. Now, the euro actually represents the largest economic bloc on this planet. So as far as representing the most people and the most GDP, it is the euro. And the euro is down 10% over the last 3 years. Now, here's the thing. It didn't really start falling again until about 2 or 3 months ago. And the reason I think the yen is going to continue to fall and get to parity with the dollar, a 1-to-1 parity with the dollar, is because Mario Draghi has come out and said, look, we have to increase the gross domestic product in Europe. We have to create inflation. And guess what? One way he can do that is by weakening that local currency. That's going to make exports cheaper and hopefully bring in more money into the euro area. So the euro, which actually is not that old of a currency, about 14 years old, it will probably fall immediately, probably about another 12 or 13%, but overall we'll probably see about another 25% fall in the euro. So as people get that Mario Draghi is going to want to weaken the euro, people are not going to want to put their money in the euro, and people are not going to put their money in the yen. So there's two of the major currencies in the world where people are not going to put their money. Now, I want to just make a note here. I did not include the Chinese yuan. For one thing, over the last 3 years, the yuan is just about where it was. There's a change of less than 2% in it, so it's actually a very stable currency. But most people are not really thinking about putting their own money in the Chinese yuan, so I didn't include it. Now, in 5 years or 10 years, it will absolutely be one of the most used and traded currencies on the planet, but it's actually not today. So the third currency I want to point out is actually gold. Now, gold is not traded that much, but the reason I included gold in here as a currency is because it is the most popular and traded non-fiat currency on this planet. And it's the currency that's been traded for the last 2,000 years, and it's not going anywhere. Now, check this out. Over the last 3 years, gold is down 30%. That's pretty big. It's down 30%. And if you're able to see the price chart on the screen, you can tell over the last about 1 year, 12 months, it's been consolidating. Now, the big question is it going to break up or is it going to break down? And that's one thing we're kind of watching for. Now, here's another thing that's interesting. People often believe that if the dollar goes up, gold has to go down, or if gold is going down, the dollar has to be going up. But this is one of those things where what may have worked in the past, maybe in the 80s and the 90s, doesn't necessarily work today, especially with trillions and trillions and trillions and tens of trillions of currency units, fiat currency units flooding the world between Japan and the US and the euro and the pound, just to name four. So we have gold. Now, the interesting about gold is whether it breaks down or breaks up immediately, it is absolutely stabilizing. It is on a long-term trend higher, and there is a very, very high probability, a number so close to 100% that it might be mistaken for 100%, that we're going to see this currency much higher in the future. So this is an area where people are actually putting some of their quote-unquote currency money because it is a currency. And with Europe having negative interest rates, Japan having pretty much a zero interest rate policy, the US having a zero interest rate policy, there's not a lot of competition for the fact that gold actually does not have a yield. Now here's the thing. The fourth currency, or what I will call the best looking horse in the glue factory, is the US dollar. Now you may think, how can the US dollar be doing this good? I mean, Ben Bernanke's just doing his damnedest, and Janet Yellen has taken the baton to really crush the US dollar. After all, don't we want to increase our exports to increase our GDP? And what about that $3 trillion of money printing and the other $3 trillion of deficit that the Obama administration has, quote unquote, printed? But look, we're on planet Earth. We can't get off planet Earth. So it's one of the major currencies, and it's the largest bond market in the world. And guess what? You have the US dollar up 11% over the last 3 years. That's pretty amazing. The dollar's getting stronger while almost everything else is getting weaker. In fact, gold has fallen in relationship to the dollar. If you consider that the dollar is up 11% and gold is down 30%, that's pretty amazing. So make note that when you get your paycheck and you live in the United States or the euro area or Canada, and that paycheck is in your local currency, that is fully invested. That is not set aside. That is not in, cash. It's actually fully invested. And that's one of the main things I want you to get. That's not actually my takeaway, but I really want you to get that your money is always invested at all times. Now, here's the thing, and here's the main takeaway I want you to get from this weekend's podcast. The dollar can rise over the next few years, and gold can rise over the next few years. As things get unstable in Japan, as they want to create a weaker currency, and in Europe, as they want to create a weaker currency, well, there's only a few places someone can put their money. They can put it in Canada, and Australia and Singapore, but those are teeny tiny countries from a currency point of view. So one of the main places it's going to go to is into the US dollar. And the US dollar, actually, the bond market in the US, is yielding a much higher yield than Japan or Europe. So that's also going to strengthen the US dollar. And we have about 300,000 people in this country becoming retired every month in the US. And when people retire, they seem to put more money into bonds than stocks. That's going to actually put more money into the US bond market. Some of that will go into government bonds, which is kind of a way of saying, give me some US dollars. So we're going to see the dollar go up over the next few years, and we're going to see gold go up over the next few years. If you followed me for any time period, you know that I've talked about gold being in a long-term secular bull market. There's probably a 50-50 chance gold bottomed at 1188, and it is consolidating and really deciding which way to break up and out or break down one last time. And we'll see, and I think a lot of this will be determined by what happens in Europe. If Europe kind of hits the printing gas pedal really hard, we may see one last kind of clean out in gold. But if you do see big announcements in Europe with, quote unquote money printing, and gold doesn't move, then that's your indicator of just how strong gold is, and the move up in gold over the next few years will be pretty fierce. And it's a place that you may want to consider to put some of your cash, including the US dollar. So hey guys, that's just, kind of another step in helping you secure your money, your future, and your life. Until next time, this is RC Peck.